You see, Japan and India have had a very strong economic relationship traditionally. And it's both at the government-to-government level, it's also at the level of a large number of Japanese companies investing in India. Over the last 2 years, we've had an agenda between Japan and India when our prime ministers had met in the later part of 2014, that as against the 1,000 odd Japanese companies investing in India currently, over the next few years, we must seek to double that target. And therefore, we have a very large Japanese investment in India, particularly in infrastructure. We have several of our infrastructure programs, metro rail in several cities of India, the industrial corridor in India, the Trans-Harbour Link in which Japan is a partner. And I think these are all investments which we are looking to expedite all these projects and maybe look for much more. Well, I don't think that would be a very accurate analysis. Till August last year, the rupee had almost kept pace with the dollar itself. It's only in August last year, when there was a lot of instability in the Chinese currency, that we were also impacted. And since then, after the initial shocks that we have had, we've been reasonably range bound. And of course, the strength of the rupee depends on the strength of the Indian economy and how much foreign investment we are able to get into the country itself, which has been reasonably large. And therefore, the Reserve Bank has been watching the situation and has been maintaining it range bound. We have to maintain a balance between a reasonable strong rupee and a realistic rupee in which we can continue in the current export environment, which with the shrinkage of the global trade is not exactly doing extremely well anywhere in the world. These are not areas where we comment in the course of the media. As a government, we've always regarded the RBI as a very important institution, and the RBI and the government have a very mature level of dialogue, and we continue to discuss all situations and decide areas which fall within our respective jurisdictions. I don't think the government and the Reserve Bank have any issues as such with each other. We've been working quite closely over the last 2 years. We had the monetary policy agreement last year. We've implemented some major reform this year, and hopefully by the end of the year, the monetary policy committee itself between the Reserve Bank and the government would come into effect. Well, I've always said that people are entitled to comment on issues. But as far as comments on persons are concerned, I've already gone on record and said I completely disapprove it. As far as the Monetary Policy Committee is concerned, we had the arrangement last year. This year, we've had a provision in the legislation itself, and hopefully by the end of the year, well into this year, the Monetary Policy Committee should start functioning. Well, it is extremely important for us because we still have a very large section of the population which is surviving on a very average kind of a resource. And therefore, inflation management always is extremely important as far as India is concerned. And even within the CPI basket, I think food inflation is something which is extremely important for us because we can't allow food prices to rise. And therefore, targeting that inflation has been a part of the monetary policy arrangement between the RBI and the government. The government started virtually on a clean slate with an image that India has entered into a phase of policy paralysis. But fortunately, with a decisive majority in the election, decision making had always become easier. And over the last 2 years, we have consistently moved in one direction, step after step, and that there has been a series of steps we've taken: opening out markets, easing businesses, rationalizing taxation, having a more non-discriminatory system of resource allocation, making entries into businesses easier, making exits out of business easier. Now, I think we've reached, we've crossed all those barriers one after the other. I have a little bit of the unfinished agenda of the reform process, which is still pending. I think we still are in the phased manner bringing down the direct tax, that's the corporate tax, down from 30% to 25%, while phasing out the exemptions. This will be completed over the next few years because we don't want to take a revenue shock suddenly. We have the major indirect tax reform, which I hope to clear very soon, the goods and services tax. We have some changes to the company law which are in the pipeline. The health of the banking system, we've started a whole program in more than one way of repairing that situation. And I think once that is done, there are three big priorities, namely spending a lot on infrastructure and bridging as far as possible the infrastructure deficit that exists in India. Secondly, a lot of expenditure would be diverted towards the rural areas in the next few years, considering the kind of distress that exists in those areas. And thirdly, I think the government has taken several steps for creating a larger framework for social security. These are the initial steps we've taken, and I think we intend to move on that roadmap. Well, this is, unless it is changed, this is a pre-existing policy that already exists for the last several years. And the policy has been that if you have these single brand stores, you must have some local sourcing. Now, the rationale behind this has been that every person who looks at the Indian market must also invest in the direction of creating some employment opportunities in India. Now, logically, it's a very rational policy. Now, in case of a stray product here or there, it may seem a little odd, but there is a sound rationale that when you are looking to invest and capture 1/6 of the world's population, which is a very large market, and a very large middle class, which is literate in these areas, and product of this kind are going to be purchased at a massive scale, then please help us in creating some job opportunities in those countries also as far as manufacturing is concerned. Now, that's the old rationale of the policy, and unless changed, that policy continues to exist. No, I can't make that comment on television, but they have represented to us. We will examine the matter in cases, because cases where there is a very high technology involved, we've already carved out an exception. And we'll always be open to look at these areas. But I can only tell you that the original policy, considering the constraints of the Indian economy and the need for employment creation, had a rationale about it. Employment creation in any economy is a very sound rationale.